Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. You probably hear a lot of entrepreneurs, influencers, and so on, even accountants, talk a lot about margin and the importance of margin. And one thing that is hard to teach is it's hard to teach what margin is on a conceptual level without bringing in the math, without bringing in the equations of figuring out revenue and cost of goods sold and all those things. So if these types of terms are foreign to you, I'm going to teach what margin fundamentally is and how to know if your margin's in good shape on your offer. And I'm going to kind of go over with you the way I think about offers and what makes a profitable and scalable offer in a very simple way. So, if you can picture this, now I will post this. I have posted it before, but if you think about one of those charts where there's a vertical line and a horizontal line that intersect. So, you've got these four different quadrants. This is very familiar. You've seen these with personality tests, you've seen them with a lot of the different books that are out there right now. There's just kind of this like continuum in both directions. And one is the effort of the offer and one is the price of the offer. And let me explain what I mean by each of those things. Price is pretty straightforward. Price is the revenue that you generate from said offer. Pretty simple. However, the effort, when I'm referring to it by effort, is the effort to sell and fulfill on the offer. So when we're talking about different offers that you may have in your repertoire, one of the issues that comes up is too many different offers, too many different options, too many different really ways to dilute your focus. And the more you simplify, the more you focus, I guarantee you, the easier it will be to scale and grow. So, in an effort to do that, I want to plot your offers on this continuum of effort versus price. So, let's go through the different quadrants and what might fall into each one so you understand exactly how to classify each one and how to evaluate this. I would encourage you take all of your offers and just kind of plot them in this grid of effort versus price and see where you stand. Uh, and of course, all of this is subjective, but I think it could be eye opening to really understand where those offers are plotted and what needs to go. So let's talk about low effort, low price. This is what I call the mailbox money. When we talk about low effort, I'm talking about what people traditionally call passive income. Now, I don't believe there's any such thing as passive income. I think there's, the preparation to earn income. If you're doing an upfront investment and you're waiting, it's just deferred income. But passive income is really about low effort, where you don't have to trade your time for money. So when we talk about low effort, we talk about like when I say mailbox money, I mean royalties. I mean, you're going to collect membership fees. You're going to collect online courses is a great one. Online courses can be low effort, relatively low effort to fulfill and deliver. Now, you can argue with me and say it's high effort to market. It just depends on what systems you have in place. But this is why it's so important to really be self-aware of what constitutes high or low effort for you. Because honestly, online courses could be low effort for someone and really high effort for someone else, depending on the context of your business and your customer. So there's not one size fits all where I say online courses belong in this quadrant. That's not the case. You have to understand how you want to determine and evaluate the effort it takes you. So when we talk about low effort, low price, I'm talking mailbox money. I'm talking a little bit of money that you earn pretty easily from doing minimal actual work and not trading your time for money. I think that's pretty clear. So high effort and low price. This is what I call a cash guzzler. Okay. You do not want anything in this quadrant. You do not want anything that takes forever to market and takes forever to fulfill on and is expensive to fulfill on you have to hire a whole team. You have to support this with a lot of material, supplies, labor, anything like that. You don't wanna have something that's really high commitment from you and yet a really low commitment from your customer. That is gonna be an unequal energy exchange, AKA for us, more, I think it's left brain people, the logical. I can't tell if it's left brain or right brain. I never get that right. Anyway, so for the more logical focused people, it's really about the margin in that the cost to deliver the product or service is gonna far outweigh the revenue. So when it comes down to high effort, low price, that is a cash guzzler. That is just flushing money down the toilet. That's it. You want to avoid those at all costs. And chances are you have a cash guzzler somewhere in your ecosystem and you may not admit it yet. But I would honestly look at which one's the most likely to lean in that quadrant, even if it's kind of on the fence, just which one's in the biggest position to become that for you and become aware of that. So the next one is a high effort and high price. So a high effort, high price. Now we're talking custom, one on one, specific services. Now, for a product, this could be top tier premium. This could be highly customized product. I think of this as the first class experience or the white glove experience. I also think of this like one on one coaching, one on one services. For me, this is my CFO clients. It's high effort, but high price. So we have a really good margin on this service. It costs us a lot to deliver it, but we make a lot in return. That is fine. A rock star offer doesn't mean it's cheap to deliver on. Now, typically, cheap to deliver on offers, like offers that don't cost you a ton of time and energy, are great. But if you do have an offer that costs you a lot of money to deliver on, to sell, market, and deliver, that is okay as long as you can recover those costs and then some consistently. As long as that sales machine is working, then you're fine. But you will probably hit the limit on this offer, which is your capacity. Because when you have a high effort offer, it's going to eat at your capacity and it's going to create more of a cost need for you to hire more people. So you have to be really careful about overindulging and over relying on this quadrant. I think everybody should have an offer that falls into this quadrant in some way, shape, or form. It could be super high luxury. It could be just reserved for 5 or so clients. And it could just be something that brings you joy and enables you to connect with your ideal client in a specific way. We have this as our CFO services, and we have a cap on the number of clients we can take at a time because we want to be able to deliver that service consistently and we don't want to have sacrifice any quality. So that's an important thing to keep in mind. And then lastly, we get into low effort, high price. This is my favorite. This is scalable offer. The low effort and high price is a scalable offer because you can, when I say low effort, I mean it's something that you can mechanically probably do from an automation standpoint, hire younger, greener team members to help deliver. It doesn't take you a ton of your time to deliver on the service, but you can get a really good amount of revenue from it. And just keep in mind too, when I say high price or low price, I'm really referring to the total revenue that you generate from it as well. So we have this offer called CFO on demand. And I believe this falls into this category. Now, it is low, I guess it's low effort, low price per. So it's really a great offer when it comes down to, okay, it's a low cost to my customer and it's low effort for me to deliver on. Now, that could change. Either of those things could change. But at the end of the day, it's a scalable offer because I could run that unlimited. I am not limited by capacity. I'm not limited by my team. I'm not limited by my time because every single month we have a call. I also take calls with my VIP members, but we're going to hit a critical point at some point where people are going to have, where I'm not going to have enough time for all the 20-minute calls that have to take place in a month when people book them. And that's okay. I'm going to either open up more time, I'm going to, bring on more team to help me, etc. But until we get there, this is truly a scalable offer because from a marginal standpoint, it doesn't take me much extra effort to deliver on the next customer and the next customer. And that's truly what scalability is. People think scalability is doing more of it. And there's another condition to it. It's doing more of it without marginally increasing the effort in the same proportion or your costs in the same proportion. If you can earn more revenue with the same cost, that's scalable. That's brilliantly scalable. And it's so important that scalable offer becomes your golden goose, as I call it, because that is your ticket to really hitting that next level of growth. And that's probably the offer you should lean in on. A lot of people are leaning in too hard on their high priced offers, thinking high price is where it's at. But in reality, it's high margin, which is just the excess of how much can you earn over how much it costs you in your effort. So as long as your earnings potential outweighs your effort, then you're golden every single time. That's profitability, earnings minus effort. And in accounting terms, we call this revenue minus cost of goods sold or cost of services. But when it really comes down to it, you have to evaluate if you're not looking at your financials every single month, which if you're not, side note, join CFO On Demand and let's look at them together. But if you're not looking at your financials every month, you should be at least keeping in mind where you're spending your time, where you're spending your energy, how that's being allocated among your offers and your types of customers. And if that matches and aligns with the earnings potential of each of your offers, because if it doesn't, then we need to realign and make sure you're focusing on the offers that are in the right quadrant. All right. I hope you found this episode helpful. I will see you on the next one. Most accountants will try to bill you for those quick questions or make you feel like you're bothering them. And the truth is that the quick questions are what I love about what we do. That's why I created a new and accessible offer for you to be able to message me your questions and get the support you need when you need it. It's called the CFO On Demand. You can now get affordable help and access to me and my team without a high monthly fee. You can also upgrade and get access to a private one-on-one office hours to bring your specific strategies to the table. Want to learn more? Head to thecfoondemand.com or click the link in the show notes. Again, that's the CFO On Demand. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.